Before any major decision, talk to a licensed professional who knows your full situation. Before number 5, one quick question. Did you claim the senior bonus deduction on your most recent return? Type yes or no in the comments right now. I want to see how many of you filed without the full picture of what the rules say you were entitled to.
Don't worry,
because the number is going to be large. Number 5, for most of the history of the tax code, car loan interest was not deductible. That changed starting with the 2025 tax year. You can now deduct up to $10,000 of interest paid on a qualifying car loan. 4 conditions apply, and missing any one of them means you receive nothing. The loan must have started after December 31st of 2024. The vehicle must be new, not used. It must be for personal use. And the vehicle must have had its final assembly in the United States. Starting with the 2026 tax year, the company holding your car loan is required to send you a new form showing your deductible interest. If a form arrives in the mail you do not recognize, do not discard it and hand it to whoever prepares your taxes, because it documents a deduction that expires after 2028. Number 4, the federal estate tax exemption, the amount your estate can pass to heirs free of federal estate tax, was scheduled to fall by roughly half at the end of 2025. Estate lawyers were booked for months, and people paid thousands to restructure assets before a deadline that no longer exists. The exemption was raised to $15 million per person, $30 million for a married couple, made permanent, and indexed to rise with inflation. For almost everyone watching, the federal estate tax is now off the table. The real action is specific. Find out this week whether your state has its own estate or inheritance tax with a far lower threshold, sometimes as low as $1 or $2 million, because a paid-off home and a retirement account can put an ordinary family in that range. Tell me in the comments whether you are already retired or still planning. And if retired, how many years? Number 3, the senior bonus deduction. Starting with the 2025 tax year, the IRS established a new deduction for people 65 and older worth up to $6,000 per qualifying person, $12,000 for a married couple where both spouses qualify. It stacks on top of your existing standard deduction and on top of the additional senior deduction already in place. It is on Schedule 1A of Form 1040. Write these income limits down right now. $75,000 for a single filer, $150,000 for a married couple filing jointly. Under those limits, you receive the full deduction. Above them, it phases out. This deduction expires after 2028. And I am holding the most important part of this explanation until number 1. Because the $6,000 headline is not your savings number. And there is one condition that locked some people out with no warning. Number 2, here is where I correct a figure that has been stated incorrectly in some widely watched retirement content online. Because getting this number wrong leads to real planning errors. The standard Medicare Part B premium in 2026, according to the Centers for Medicare and Medicaid Services, is $202.90 per month, up from $185 in 2025. Some widely viewed videos have stated this as $22.90. That figure is wrong by $180 every single month. The correct figure, confirmed by the official Medicare website, is $202.90 per month. Write that down. The income-related surcharge known as IRMA adds a monthly charge above that base for retirees who cross an income threshold. The 2026 first tier level, per the Centers for Medicare and Medicaid Services, is $109,000 for a single filer and $218,000 for a married couple, based on modified adjusted gross income from your 2024 return. Cross that line by $1 and the full surcharge activates for the entire year. Roughly $80 per person per month above the base, all at once, if your income dropped because you retired or had a qualifying life event. The Social Security Administration has Form SSA 44, which can reduce or eliminate a surcharge built on income you no longer earn. Pause and write that down. Form SSA 44. Social Security Administration. Before number 1, let me tell you about Patricia. She is an illustrative composite, not a verified individual, but she represents a pattern that comes up consistently in retirement tax discussions. Patricia is 68, a retired school teacher from New Jersey who pays about $13,000 a year in property and state income taxes. From 2017 through 2024, she took the standard deduction every year because the math clearly favored it. Then her nephew mentioned the SALT cap had changed. She ran both numbers, and her itemized deductions beat her standard deduction by over $7,000. She filed an amended return, and 8 years of the right habit had quietly become the habit that was costing her money every single year. Number 1. Two things come together here, and both have been waiting since the beginning of this video. First, the state and local tax cap. For 8 years, this deduction was capped at $10,000 regardless of what you actually paid. In 2026, per the IRS, that cap rose to $40,400, more than 4 times the previous limit. For homeowners in states with meaningful property or income taxes, that is thousands of dollars in additional deductions that did not exist a year ago. But you must itemize to use this deduction. You cannot take the standard deduction and the state and local tax deduction in the same return. After 8 years of the standard deduction being the right answer, many retirees are still filing that way on autopilot. Run standard versus itemized every year going forward. The cap adjusts upward through 2029. Now the full senior bonus deduction. The number I said I would give you at the start. The deduction reduces your taxable income, and it is not a tax credit. What you actually save is your marginal tax rate multiplied by the deduction amount. In the 12% bracket, $6,000 times 12% equals $720 per qualifying person per year. Money that stays in your account. In the 22% bracket, 6,000 times 22% equals $1,320 per person. For a married couple where both qualify at 22%, the annual savings is $2,640. That is the real number, your bracket rate times 6,000, not 6,000 as a direct check. And the condition I held back until now, the senior bonus deduction is not available to anyone who files as married, filing separately. If that is your status for any reason, this benefit does not apply. And that is the rule that shut some people out this year with no advance notice. Drop the number of whichever change surprised you most in the comments. And the one that comes up most often is the one I build the next full video around. Here is the rapid recap. 5-car loan interest up to $10,000. U.S. assembled new vehicle. Loan after December 2024. Personal use. Expires 2028. For estate exemption, now $15 million per person. Permanent and indexed to inflation. But check your state threshold this week. 3 senior bonus up to $6,000 per person. Income limits $75,000 single and 150,000 married filing jointly. Schedule 1A on Form 1040. Expires 2028. 2 Standard, Part B, is $202.90 per month in 2026. IRMA first-tier threshold is 109,000 single and 218,000 married, based on 2024 income. Form SSA 44 through the Social Security Administration. One SALT cap is $40,400 and requires itemizing. Run both numbers, and the senior bonus saves your bracket rate times 6,000, not 6,000 flat, and is unavailable for married filing separately. 3 actions this week. 3. Pull your return and look for Schedule 1A. If you are 65 or older, under the income limit, and it is missing, speak with a licensed professional about amending before 2028. 2. If you own a home in a state with real property or income taxes, ask your preparer to run standard and itemized before you finalize this year. 1. Before any large IRA withdrawal or Roth conversion. Check your income against the IRMA thresholds of 109,000 for single and 218,000 for married. Because staying under those lines now protects your Medicare costs 2 years out. For every major decision, work with a licensed professional. Form SSA 44 and current figures are available through the Social Security Administration and the official Medicare website. If you have a parent, a sibling, or a close friend who filed this year without knowing these rules, sharing this video with them is the most useful thing you can do. And the full IRMA breakdown covering how a single income event from 2 years ago reaches forward into today's Medicare premiums is the next video after this one. Hello friends. Before this year's tax season ended, 3 things happened to retirees across this country that most of them are still working through right now. And each one involved money that did not have to go to the government. A 68-year-old widow in Ohio filed her return with a preparer she had trusted for 12 years. 2 months later, a friend mentioned the senior bonus deduction. She checked her return and it was not there. $720. She was entitled to stay with the government because neither she nor her preparer caught a change that took effect that very year. A retired couple in New Jersey paid $11,000 in property and state income taxes last year and took the standard deduction the way they had every year since 2017, because back then it was the right call. In 2026, that cap rose to more than 4 times its previous limit. Running both numbers would have saved them over $2,000 this year. And nobody told them the calculation they had relied on for 8 years had changed. A retired engineer in Arizona made a Roth conversion 2 years ago. It pushed his income above a threshold he had no reason to know existed. This year, his Medicare Part B premium jumped by nearly $80 a month, and he paid it all year without knowing why. Because the cause was a decision in a tax return from 2024. If any of those situations sound familiar, this video is for you. And if you claimed the senior bonus deduction this year, but the savings were smaller than you expected, stay with me, because the reason behind that gap is exactly what we resolve at the end. There are 5 changes from the 2025 and 2026 tax years, and we are going through all 5 using what the IRS and the Centers for Medicare and Medicaid Services actually say. This video is for United States retirees and pre-retirees navigating tax and Medicare decisions in 2026 The goal is to help you understand how these 5 changes affect your taxable income, your Medicare premiums, and your estate plan clearly enough to ask the right questions when you file. Everything here comes from publicly available official information from the IRS, the Centers for Medicare and Medicaid Services, and the Social Security Administration. And I will name each source as we go. This is educational content only, not personalized financial, tax, or legal advice. And nothing here is a promise of any specific payment.